Good morning, my name is Richard Perry and this is the ETX Capital Morning Market Bites. Asian equity markets and emerging market currencies and commodities fell early this morning after the PBOC let the yuan fall sharply for a second straight day, forcing investors to look towards safe haven assets such as government debt. The large fall of 4% in the Chinese currency dampened sentiment for risky assets globally, with equities, currencies and commodities coming under pressure as money managers fear it could ignite a currency war that could destabilise the global economy. The MSCI's broadest index of Asia-Pacific shares outside of Japan fell 2.1% to a two-year low. Equity markets from Australia to Singapore were also trading lower overnight, with Wall Street, the Dow falling 1.2% and the S&P 500 falling 1% as the PBO's currency move added fears about the global economic outlook and hit companies with large earnings exposure to China. Many Western firms have already reported slowing sales in China as its economy slows pace, and shares of companies from German automakers to luxury good makers are expected to come under pressure with the fall in demand. Currencies considered as China proxies were significantly lower, with the Australian dollar nursing losses at 0.7250 per dollar, falling more than 1.5% overnight. Against the yen, the dollar was slightly lower at 125.07 after rising as high as 125.28 against the yen earlier in the trading session, its highest level since early June. The euro gained 0.2% against the yen to 138.44 after it earlier rose as high as 138.69 against the yen, its highest since June the 25th. US Treasury yields dropped to their lowest levels since late April as the nervousness around China's currency measures curbed investors' appetite for risk. The benchmark 10-year note yield slipped to 2.080% in Asia trading compared to its US close of 2.139%. Commodities investors are worried that the prolonged yuan weakness could revive deflationary pressures as import costs for Chinese firms rise due to the PBOC's currency intervention, dampening demand for raw materials. US crude futures were at 42.99, down 9 cents from their last close, which marked its lowest settlement since March 2009. Brent futures were down 26 cents at 48.92 per barrel, more than 25% below their last peak in May. The Organisation of the Petroleum Export Countries, OPEC, said that its members continue to boost supplies. According to the secondary source cited by the report, OPEC produced 31.5 million barrels per day in July. That's 1.5 million barrels per day, more than its 30 million target. Copper and aluminium also hit 6-year lows on Tuesday as the cheap yuan fueled worries that the world's top metal consumer would cut back on imports. On the data front today at 9:30 we have UK unemployment data, then later on in the day EU-wide industrial production, and at 3:30 the EIA crude oil stocks change. At present the FTSE is trading lower at 65.61, down 115 points thus far, and the DAX is lower at 11.031, down 284 points. Thank you.